All right, quick heads up here. This is not investment advice. This is just information to get you thinking. Do your own homework, talk to your own advisors, and make sure this kind of deal makes sense for you. We're here to share ideas, not tell you what to do. Cool? Okay, cool. Hey there, budding business owners. Welcome to Invest in Square Feet. Today we're going to switch gears and dive into something a little different. Investing into Main Street businesses is something that I've always been interested in. We're talking about the kinds of businesses that keep the world running. You know, laundromats, plumbing companies, landscaping, trucking, manufacturing, the foundational businesses that have been around forever. No Silicon Valley startups here, no complicated tech talk. We're focusing on the stuff that's tangible, reliable, and if done right, super profitable. We'll get into how to evaluate these businesses, what to look for in financials, even if they're a mess, and how to make smart investments that actually pay off. If you've ever thought about owning your own business but didn't know where to start, if you're just curious about how these deals work, this episode is going to be for you. So let's get into it.
Let's call it Main Street businesses. That would be inclusive of laundromats, exclusive of real estate. I think that's a different thing. It would exclude any sort of like super high technology stuff, anything coming out of Silicon Valley or AI. Those multiples are just too high. But it would be the kind of stuff your father, your grandfather, like the foundational businesses of this country: manufacturing, business services, home services, plumbing, roofing, landscaping, digital marketing, distribution, trucking, all those kind of things fall under the umbrella. I think the guardrails are probably for self-funded search, which is where I focus. This typically deals with profit or EBITDA or cash flow under, call it $1.5 million, where they fit quite nicely into the SBA 7A loan, which has the somewhat maximum of $5 million. So hopefully that kind of answered it.
Yeah, that does. That does. When you go through and you're looking for acquiring these types of businesses, what are some of the things that you should be looking for? Obviously, you want to get all the financials and all of that. And let's just say you've never bought a business before, but you've got these financial statements. What are some of the first steps that you should take to be able to qualify this? Is this a good deal? Is this something I should pass on? Are there any tips or strategies that you might be able to throw out there to be able to do that quickly, to be able to know, yes, no, where am I going to spend my time at?
You should get taxes, bank statements, and financials. But now in my 8th year of running Guardian, I'm going to tell you, unless you're a forensic accountant, you don't know squat and probably wouldn't know what to do with those things, even if I explained it for a 3-hour webinar. Why? Because small business accounting is probably some of the messiest stuff you've ever seen.
Yeah.
No small business owner overinvests in their financial stack. So what you're getting is like year-old gumbo level garbage in, and you're a novice and you're trying to say, is there a piece of beef in here I can still salvage, or maybe a pea?
Yeah.
I don't really know. And then you're saying, hey, I want to make $1 million personal guarantee after I look at this year-old gumbo that's just garbage in. I would tell my best friend, my mother, or anybody I cared about on God's green earth to get a quality of earnings. Why? I don't know anybody that can lose $1 million, $500,000, $250,000, $100,000, frankly. And what I will tell you is 20% of the deals I see now are purposefully fraudulent, meaning the owner or the broker knows that the numbers are off and they're trying to sell it to you, hoping you're a sucker. And even more are non-maliciously off, but will still send you to the poorhouse. So if you're a forensic accountant and financials, taxes, bank statements, but I would say go get a forensic accountant to do a quality rate.
Yeah, yeah. There a level where it might get better? I completely understand this is like you said, like $1.5 million business, and wherever their EBITDA might land at. Is there a threshold that you've seen once you get above this business, their financials get to be better? They have maybe people on staff who are helping them keep up with everything. Is there such a thing where you can maybe, we'll say, let your guard down a little bit? And that's not the right term to look at it, but just a level where things get easier to be able to decipher because they do have that staff in place.
So great question. I'm going to try to use my arms here. This might screw up. As EBITDA gets bigger, call it $2 to $3 million, of EBITDA or profit, financials tend to get better. What also gets more nefarious?
Expenses?
No, the investors who typically own the business and how much they will do to try to get over.
Mhm.
So as the quality of the financials go up, the skill at authenticating the truth of the players goes up. And so you don't get a true benefit. It's all so for instance, Warren Buffett, when he buys a company, gets a quality of earnings. Some guy that buys $100 million business, he gets a quality of earnings. There's no level of EBITDA where somebody says, oh, these financials are good. I don't need to do any work. There always is an opportunity and a penchant for folks to tell a fib. And let me tell you why. Businesses are valued at 3 to 5 to more than 5 times profit. So when I tell a fib as an owner about $1 of EBITDA, I don't get $1 back. I get 3 to 5 plus dollars back.
Yeah.
So I don't know of a time when there's more incentive for even reasonable people to lie outside of maybe if your girlfriend asks you if you cheated. And so you shouldn't expect people to tell the truth. This is like the used car lot. You wouldn't buy a 20-year-old car at the used car lot without, having somebody who knew engines and transmissions check it out. There's no take back either. There's no customer service line like at Walmart. So
Yeah.
buyer beware.
From a seller's standpoint, I'm just curious if you ever see this. Do sellers ever get their own QV and offer
Yes.
that out to buyers? Let's just say that they don't have anything to hide. They feel very confident about the organization. Does that happen? And at these lower levels, maybe at a higher level, maybe they do that. But I'm just curious if they ever see that on the seller's side presenting that.
It's becoming a bigger trend because the word's getting out that a quality of earnings is a detailed analysis. Some would liken it to a proctological exam to an extent. Now we say that flippant, but it's certainly more scrutiny than any private business owners ever had in their business. And if I had to have one of those done, I would prefer to do one with the person I hired, not a person across
Yeah.
the table hired. And
Yeah.
so I
Good
think a
point.
lot of sellers are saying, hey, look, if I can arrive at a fair EBITDA number, then all of the buyer has to do is come up with a multiple and find some way to spot check the analysis I've already done. That way I stay out of the hot seat, have more time to get the analysis done. I can get it explained to me by somebody I hire, and it's a smoother process. The seller should be the hero of the story, not someone having to represent financials when they are really good at sales and business operations.
Yeah, yeah. And I feel like that's a little nugget of strategy for any seller that might be considering offloading their business. Yeah. Would you agree?
Absolutely. In fact,
Yeah.
I recommend it highly. I don't market on it as much, primarily because it can be tough to convince a seller who's already paying for a broker or an investment banker who they think is probably more financial than them to also get a quality of earnings. What they don't understand is that anyone who says nice things about your financials to try to get a maximum price brings people to the market, but nobody trusts them.
Hmm.
It's like the used car salesperson. The accountants, we have the conservatism and the requirements for professionals to be conservative. And so we're more like the mechanic in the car example. And so to actually get both people interested and believing the numbers, you should probably do a broker, banker, and a sell side QOE. But I think it's hard to market it directly when there's typically another advisor managing the process.
Hmm. Yeah. What if I was interested in purchasing a business? What would be the path that I should take to be able to find out what's out there? I don't know if there's a way to be able to look at an area because, like, I'm in real estate, right? We have certain areas, we have our buy boxes, we've qualified specific locations and areas, and then we're looking for buildings to come for sale in that particular area. Are there certain platforms or resources to be able to go and find businesses that would be for sale? And to continue that on, are there better platforms, right? LoopNet in the real estate space is all of the assets that nobody wants that normally ends up on LoopNet. Not all the time, but a lot of times. So that's not necessarily a good way to go and look for it. So I'm curious if there's the same type of ecosystem in a business?
Probably a bit similar, but I would characterize it a different way. I think our loop net is called biz buy sell.
Okay.
Everybody starts there. It's like McDonald's. Is it the best hamburger in the world? Heck no. Does everybody start at McDonald's? Yeah. When other stuff isn't available, do you go to McDonald's? Yeah. Is hot McDonald's pretty good most times? Yep. And so I think that's the first place people would go. There's hundreds of websites that list deals for sale. And then there's some aggregators. Kumo is one of my favorites that go on the internet, aggregate a bunch of these. And I'm sure with AI and whatnot, there'll be others coming on board soon. But I would say there's a lot of similarities in real estate. So for instance, let me go from the extreme. So Mac, let's say you're my best friend and you're selling a piece of real estate in my buy box. I'm the best buyer for it. I'm going to hear about it first. I already know about it. I trust you. You may give me better seller financing. You're going to tell me about that nasty landlord that I should probably get a 5-year or 10-year or 20-year or forever lease on because you don't ever want to negotiate with me. I'm the best one. If I pass, you're probably going to go to a bunch of people who have bought real estate in that area because they already demonstrated capital capacity, willingness, and execution, so to T. If they can't, then you go to everybody else. And once you get to everybody else, you're not trusting anyone, scrutinizing folks. You're evaluating buyers as much as they're evaluating property. The same sort of thing happens in business acquisition in that you get better looks as you get closer to and more experience with buying. But you got to start at McDonald's, man.
Yep, yep. No, that makes sense. Walk through the process, if you could, how you go about breaking down the due diligence when you think you found something. What are the steps that you should go through to be able to qualify or disqualify that particular opportunity? And maybe some of that's even pulling in third party, obviously getting a QV and all of that. But I'm just curious, when you're initially starting out, how do you know when something looks interesting, other than maybe you're interested in the asset type? Are there certain check boxes that you should be looking for early on there?
Sure. So let me speak to a real estate informed investor. And if you're not at that level of understanding, you got to get there to understand what I'm going to say.
Mhm.
This is not a QOE guy selling QOEs, but you'll follow me in a second. So in real estate, one of the differences, many different, there's a thing called an appraisal. So there's like a certifiable sort of understood party that goes and values these assets. That isn't always perfect, but I would say plus or minus 5 or 10% most of the time. That's the one difference. The second one, real estate prices don't fluctuate more than 10% most years. So if I look at an asset this year, unless something drastically happens, the likelihood of it's going to be within 10% the following year, unless some big development or some disaster, very likely. So they don't change. The prices aren't volatile. And then oftentimes, third, the thing is the prices aren't a function of something that is super volatile like cash flow. It's typically a function of square feet, location, age, amenities, right? And so with 5 or 6 things, you can get what the value is. Also, most people are somewhat familiar with real estate from either working in a building, owning a house, so they can go in. So how is business acquisition different? So the same business, your local plumbing company, same operations, really same people, almost the same business. One year it can do $300,000 of profit. The next year, $500,000 worth of profit. The following year, $200,000 worth of profit.
Mhm.
So if the multiple is 4x on the $300,000 year, that's a $1.2 million business. On the $500,000 year, that's a $2 million business. On the $200,000 year, that's an $800,000 business. So somewhere between $800,000 and $2 million is the price of the asset, all based on the profit in the year that you're considering. Most people consider the last 12 months. And then there's no appraiser. So, man, I can't say, hey, let me get the best appraiser in this state to come appraise the business. Actually, the appraisers in small business acquisition are arguably the least informed and the worst at it. So that doesn't help. So then how do you get comfortable with the fair value of a business? The first thing is you need to understand the sustainable cash flow, the expected cash flow of the business. And that's typically a deep analysis on the historical financials, but the historical financials of small businesses are notoriously pretty wonky. So then the number that you need, the average professional can't get. And now, can I just get close? Getting within $100,000 means you're within $400,000 of purchase price. So is close really what you want to do? So what do you look for? You look for a business that has a profit margin that's similar to other businesses in the industry. So if you see a manufacturing company that should have 12% margins and they have 40% margins, that would raise a red flag for me. If I saw too many ad backs. Now, there's a lot of ad backs in small businesses because owners run their personal finances through them. But if everything is an ad back, that would be a red flag for me. And then if I was betting any money, I would bring in a third party quality range provider almost immediately because they're really the closest thing to an appraiser in this market. And because the valuations are more volatile, the EBITDA that you multiply times 4 plus or minus to get to value is more volatile because they can change way more than 10% in any given year. And because a seller knowing that they're selling, if they can convince you $1 of EBITDA is there, there really isn't, they're going to get $4 out of you. I wouldn't even consider doing this without a professional. I think the QOE is the appraiser for a small business acquisition.
Hmm. So the QOV is going to allow you to obviously understand, is that dollar actually there or is that made up? But the chances of you being able to uncover that on your own is pretty slim unless you have experience in that type of asset. Is that correct? Or
Yeah,
that
and
type of.
forensic transaction accountants are like the green berets of accounting. So even accountants hire me because if they're not doing forensic transaction accounting, it's at a level above their pay grade, frankly.
Hmm.
And once you have the number that the EBITDA is, it's very easy to get to valuation. Until you do, you're naked. Like I have engineers trying to tell me they know, and then I look through their analysis and I'm like, you're nowhere close. But if I was talking to my best friend, I would just say, if you're betting 500,000 or more, get a quality of range. It's where to go.
Hmm. Yeah, interesting. So let me, before we get into that, let me back up. You were saying depending on whatever the multiple is on the particular business, obviously that determines what your purchase price would be. How do you establish what that multiple is? And obviously different businesses are going to have different multiples depending. Is there like a resource that you can go and look and see what that type of business is trading for or what the current multiple is at that time? Because I
Yes.
like I'm referring
Similar
this
to real
to
estate.
like a cap rate is basically what I'm referring this back to real estate terms. I'm referring to that the same way as what this multiple would be.
Yeah.
Yes.
So the cap rate and the multiple are very similar. There are data sources to get good multiples. They differ. One of the things that I like about small business acquisition is for deals $500,000 to about $1 million of EBITDA, the multiple is 3 to 4. If it's above $1 million in EBITDA, it's probably 4 to 5 up until about $1.5 million of EBITDA. I would say 80% of deals fall into that. So you can probably save yourself the time. And if you wanted to do research, you could find volumes of data on multiples for private business sales. A lot of the business brokerages or small business investment banks have them downloadable from their websites. So really the multiple is pretty easy, like the cap rate. It's really understanding the cap. What is the actual net income on the real estate property, or in this case, the EBITDA? And I would argue the EBITDA is way more complicated because of a lot more moving parts.
Got it. And then see what margins should. I wrote down how do you establish what margins should, and I don't understand that question
Yeah,
now.
what they should be. Yeah. No.
Okay, yeah, I guess that's what it is. Yeah.
So my recommendation is like dating. Probably shouldn't marry the first guy you date.
Hmm.
Probably need to go on some volume of dates. I won't put a number on it, just to get a sense on what you like, don't like, what you're evaluating, how you feel about stuff, all that kind of. Why the heck did I say that? Because you probably want to look at 10 deals in HVAC before you really think you're in a good position to buy an HVAC.
Hmm.
Once you look at about 10, you should take the average of the profit margins, and that should be a decent indicator of what the average should. Now, there's also databases of the average profit margins per industry that are out there on the internet. But if you didn't want to go through that stuff, just look at about 10 and you'll see it.
And
Alternatively, what you'll see is outliers. Go ahead, man.
no, no, go ahead. Finish that thought.
You'll see outliers. So I know from 15 years in this that a manufacturing business doing 40% margin is left. It just doesn't. I also know like an HVAC business doing 35% margins. It's just really tough to get. So one of the things to pick up as you get better, and it's like real estate, right? The guy who's bought 10 is probably better than the guy who's bought zero. The guy who's bought 100 is probably better than the guy who's bought 10. Your deal discretion gets better as you do more. And so part of it is capturing what's normal and what's not during your evaluation process so you can bring it to bear when you're making a choice to go forward with the investment.
Hmm. Hmm. Interesting. Want to take this in maybe a different direction that you don't normally get put in these types of situations. I'm curious if you have any experience working with, we'll say, investors that are presented. Someone wants to invest or purchase some type of an asset, and they're getting other people together to be able to raise money, raise capital for that particular opportunity. What
Sure.
are the things that they should be asking and looking for before they make the determination of whether or not I want to invest in this company with this person who's signing on the loan and doing all of those things?
Sure. So let me take a step back and then I'll answer your question. The person who does the best with the business acquisition buys it at a good price, grows it at the best pace, and exits it with the best strategy. Those three things broadly are what you need to do. So if I'm betting on a person making an investment in a person who's doing those things, I want to know how good are they at paying a good price? How good are they at growing? And how smart would they be about exit? But before I get there, are they a good person? So background checks probably the first. Second is what I love about LinkedIn is you can back channel points of view on people. So if you ask a person, hey, can you give me three references? Those people are going to say nice things. But if you go to LinkedIn, you can find a list of their contacts and you go talk to five of them. And typically, if people have a really bad or really good experience with someone, they won't be too busy to share.
Hmm.
Those are some of the important things to look at from a person deal perspective, which probably isn't too different than real estate, frankly. The other thing is, again, as an investor, I'm more removed from the deal than the buyer. So Elliott's buying, Matt's investing. I'm going to see 10 times the data, Matt. Matt, make sure I get a quality of earning.
Hmm.
Now, I'm going to sound like a broken record, but I'll tell you what, as a business buyer, if I just put a buyer hat on, so forget Elliott, I'm some other guy, I'm Steve. Steve, the business buyer. What I will typically get is a deal closing fee for closing the deal. I will get an annual salary for running the business, and I will get participation in the equity. Two of those fees I get before I'm any good.
Hmm.
Two of those fees I'll get if I don't do a quality of earnings and pick a bad deal and get you to invest. So Matt, you need to be very focused on scrutinizing the quality of earnings. In fact, I had a session, a video with a investor in these deals on last Thursday. And even though they do this all the time, there were some angles that I communicated to them about how important it was for investors to get into decision making around what type of quality of earnings was actually requisition because they're not all built the same. Because I was like, that's the only look you get into the conservative nature of the business. In fact, betting without one is crazy town, given how removed an investor is going to be, and frankly, how biased a typical buyer is. Because I'm going to get my transaction fee, and before you know anything's messed up, I'm going to get a year's salary, really off of your money.
Hmm.
Does that make sense?
100%. Yeah, absolutely. You mentioned, so completely agree, very similar to real estate. You want to obviously know who the sponsor is called, which by the way,
Yep.
is there a different name for the
No
person?
sponsor,
No, the sponsor.
buyer.
Okay.
Yep.
Okay. Yeah. So you mentioned doing a background check. Where would you suggest a good place to get background checks? We do very similar things and we've used a number of different platforms. Some we like, some we don't like. I'm just curious what your perspective is. If there's some maybe I haven't even heard of before.
I'm blessed to have a somewhat narrow lens of where I'm excellent. And I tend to not opine on things where I'm not excellent for fear that I confuse someone on what I'm market leading in that can kick anybody's butt in versus stuff I would just say on a podcast to sound like I know everything. I'm not that person. I would say people who do background checks tend to know the quality of the background checks because they've either missed something or caught
Yeah.
something that was unexpected. So I would just go to 10 people who have done business transactions and ask them just the same way you probably would in real estate. So you have your own point of view.
Yep.
I've purchased background checks that barely did anything. I purchased ones that did a whole lot, but I don't want to opine on that and then make you undermine my knowledge and some other stuff that I'm way more knowledgeable in. That's fair.
No, that makes sense. Wait, and you mentioned it real quick. What would you say that you are world class in?
So understanding the EBITDA of small businesses, so under $10 million in enterprise value, I would go toe to toe with anyone, anywhere in that. And I think the referrals and testimonials that I have on the internet would agree with
Love it.
my perspective on that. And then when it comes to helping first time buyers close their first deal, I would go head to head with anybody in that.
Yeah, that's right. I want to dive into that. One more question here because you alluded to it a few minutes ago, and I'm just curious. Are there different types of QE that you can get? And are there different names? So this is a shitty quality of earnings. This is like the Cadillac of quality of earnings, or is it all good?
It ain't all good, man. Another slightly complicating factor relative to real estate. So again, I want to speak to a real estate investor. So one of the things that happens on deals under $10 million is people will say, I got a $2 million deal. It's just an HVAC business. It's pretty simple. I'll get a shitty quality of earning because that's all I want to pay. And you lose 2 million bucks. And all of a sudden that ain't a little amount of money no more
Yeah,
compared to $20,000 I would have charged for a Cadillac. Be careful.
yeah,
The other thing is, and on sales calls, I've gotten to the point where this is the real question I ask because I'll never convince a person on a call to pay more for a service than what they thought, but I can ask thoughtful questions. So I ask people, do you think that cheap guy is accepting less margin on their work than I am? Or do you think they're doing fewer things?
yeah. That's a great way to look at all things in life whenever you're comparing pricing. Yeah,
I'll also say this, if you don't know someone, and this is why I'm able to walk with the confidence that I have, go on LinkedIn or go on Twitter or go to your networks and say, who's a good QE provider for deals under 10 million bucks? I bet you my name comes up. There'll be some others as well. There's some other good people, but that should be a good indication too. There are people who live this who know. If you don't know personally, go get some advice from those who do know.
yeah. I love it. So let's get to your business here. Your business, as I understand it, you specialize in helping people get into their first deal.
That's right.
Talk a little bit about who are the types of people that you're typically working with? Were they in an industry and they want to open up or they want to own some type of company in that industry? Is that typically how they want to or how they get I guess the desire to purchase one of these
Sure.
businesses? Or I'm just curious, like how do people come to you and how do you typically find I don't want to say their state of mind, but what it is that
Yeah.
they're looking for, where they came from?
I was them 8 years ago. So there's another one. Like I know I've been around this long, but
Mhm.
who are they? Man, honestly, they're you, right? I see you taking notes. This isn't for your listeners only. They're
Yeah.
real estate investors who want to potentially invest in something with higher returns, right? The ability to do fewer deals and make more money. They're industry folks who retire to their 9 to 5 and say, hey, look, I'm sitting on $1 million of retirement. I can take $200,000 out and go make a bet that will fundamentally change the wealth equation in my family forever. They are young gunners who say a year or two out of undergrad, I keep hearing these stories of people buying $1 million businesses, older or smarter than me. I'm going for it. And so how do I communicate to all those people? And what I love about 2025 is digital marketing, podcasts, socials are a great way to put consistent messaging. As you see a couple minutes ago, I said, I'm not going to talk about background checks. That's not my domain.
Yeah.
When it comes to due diligence or helping people get their first deal done, that's me. I talk about it, and the people who are searching for it find my stuff and come reach out. And I think the commonality around the people who come to me versus some other people who I think are pitching, I'll call it baloney, fool's gold deal classes, is that the folks that come to me know the process is hard and are willing to go through a hard process to get the return.
Hmm.
The people who skip over me and do Mr. Easy or Mrs. Easy's class, they want a hard thing to be easy, and I don't know how to help.
Yeah. Yeah. That makes perfect sense. So, could you describe your perfect customer, the people that you're looking for, what they maybe what stage they're at, what they might be struggling with, they might be, banging their head against the wall trying to figure out? Talk a little bit about some of those things.
So as a marketer, I'm always going to be more specific than someone who would fit in the range of the people I help. So with that disclaimer, 40 years old, married, 2 kids, earning over $200,000 a year, have retirement savings or real estate assets, some sort of asset that's probably over $500,000. They are discerning, so they don't believe bullshit. They don't think easy things are hard or hard things are easy. They consume data in line with their expectation of wealth. They consume data in line with their expectations of wealth. That means a great, excellent, top class real estate investor is going to consume more than like a garage shop real estate investor. A great business investor is going to consume more data than a fake or not there business acquirer. And so one of the things that I know is that those who are really serious about this and who understand what $1 million personal guarantee business acquisition bet really is are not scared of volumes of information that help them get better at that because they understand the impact that it can have on their family. And so if
Hmm.
I had to describe my person, that's them. Now there's a range. There's somebody who just started yesterday and they're ready to go and hey, that works. Or there's somebody who has been looking meandering for 2 or 3 years. There's a real estate investor who says, hey, I want to diversify. Those all fit in the range. But if I'm being a marketer, my ideal person is someone that has characteristics like that.
Yeah, that makes perfect sense. Yeah. Is there a way that if I asked you what the average returns a business in this realm should have, and basically where is a good deal potentially at? Where is unrealistic realm that there's no way the business could be producing that much? Like where are those break points at, would you say?
That is an
Just to
excellent question. So I'm going to speak to my real estate investors again. So I think a good real estate return is probably 10 to 15%. A crazy man.
right. No, that's exactly right. Yeah.
So the expected return on a self-funded sort of small business acquisition expected is double that. So 33%.
Okay.
Now, the data set that quoted this is a little tangential to the way that the deals are done now. So it's a Stanford search fund guide that posts the returns of similar acquisitions. And that's the most robust guide so far. For the past 5 years, the average return on these deals has been 33%. That's why a lot of people chase them. I would say as a buyer or a sponsor, you shouldn't model anything over 35% if you're trying to get capital. It's just not, the juice ain't worth the squeeze in terms of just model the average and nobody questions it. You start trying to get 45%. Even if you believe it, you just, experienced investors will ask more questions about something, a standard deviation
Sure.
above me. If somebody showed me a deal at 45% returns, I think that's, the air is pretty thin up there. But here's the thing, Matt. It's not impossible or even improbable. You heard me say this several times. The range of outcomes in business acquisition is wider than the range in real estate.
Mhm.
What that means is an average of 33 includes somebody who went bankrupt, includes somebody who probably had a 300%. So those things are crazy. It's just, if I'm trying to get you to invest in my deal, man, what I'm going to try to figure out is, does my deal pencil at 33% return, which is what you should expect as an equity investor?
Mhm.
If it does, I'm going to model the most surefire way I think I can get to 33%. I'm going to probably give you a little juice on an upside case and show you that I'm not just looking for upside, but protecting your downside and your money, and give you a downside case
Yeah.
and say, Matt, we're probably somewhere between 25% and 35% under sort of a reasonable set of assumptions. And I think that would be a good range where the deal should be. If somebody shows up with a 15% business acquisition return, go buy some real estate.
Yeah. Along those lines, so where my mind is going, and I'm looking to be corrected here if this is right or not. So in real estate, you only have so many apartments to go around, right? You buy a 200 unit property, you can get to 100% occupancy, but you can't go above that, right? You might be able to push that last 5%, a little bit
Price might
higher
go up.
rents, really pushing it to be able to create that much more cash flow and income. But there is definitely a ceiling. There is definitely a cap. So when you're looking at these opportunities, and you're listening to the projections and the pitch and all of that, what is the same type of question? What is where should you see them pushing these things through? Like, again, in real estate, if you see someone trying to push rents and they're increasing 10, 12, 15% every year, so meaning you're pushing those rents that much every year, that's not going to be sustainable. That's like a red flag. So,
Sure.
from your perspective, where does that red flag come in from an income projection standpoint, or what I'm going to be able to do with this business?
All right, I'm going to do something you probably didn't expect. This is the Elliott no nonsense approach to doing deals. And it's the reason why I call BS on a lot of people. Right? So when I was at Harvard, everybody talked about modeling, price increases, better operational management. I'm going to hire a super sales guy. Look at all these 5, 10 cool
Right.
things I'm going to do to juice the returns. I'm smart, man. I'm smart. As an engineer, I'm conservative, right? So I'm looking at the numbers. I'm like, hold on, man. Let me take a step back. If I buy a business with 80 to 90% leverage and just pay off the debt in 5 years, I think I get about a 25 to 30%. So if I don't do nothing, man, except not screw the thing up, or for everything that goes bad, I do something on the good side that evens it out.
Hmm.
Nothing spectacular, nothing forecast excellent, just good old blocking and tackling. My quarterback did not get sacked more times than average. If I just do that, I'm going to get an equity investor who only had to put up 20% of the purchase price, about 35% return. And again, if you think about how the heck does that real estate, it takes way longer because a real estate asset makes 10% off of the equity value, right? A business is making 33% because 3X multiple. So in subject to taxes in about 3 to 5 years, you can pay off all the debt and now you got the return. So what's unreasonable? And why did I say model no growth, more or less, is what I told people to do? Because nobody's going to laugh me out of the room for arguing no growth. You put in the upside case, we'll be like, why do I want to work with you if you don't want to grow it? I didn't say I didn't want to grow it. I said the thing you should bet on is if I don't, you still get paid. If I do, which is my plan, you get paid. That's who I am. The other reason is because the simplicity of it. So if I give you 5 or 10 things I need to do to be successful, I got to explain all those 5 or 2 things. You have to evaluate what's the probability of those being successful. To your point, rent raises. You could probably write me a good paper on what's the reasonable amount given these circumstances and all of that. As a seasoned deal professional, I could give you the same thing on execution plans for businesses. But I'll tell you what, if a person just comes to me and says, hey man, I'm not going to screw this thing up and get you a 30% return. I got these plans, but we all know what those are. Are you in? It's just easy to believe, easy to say yes. And as a beginner, I'm trying to break it down so that Matt can make a decision this year to put some money in a business acquisition. I will come back and listen to this and say, hey guy, Take all of those future projections and like improvement plans out and just model no growth. Do I get a 25 to 30% return in 5 years? That's the question I'd ask.
That's great. That's a really great way to look at that. I love that approach. Yeah, that is interesting. I feel like that answered all of the questions that I possibly could have had. Yeah,
And I did my job.
yeah,
So
that
man, that's why I have a master class. Where I try to make complex shit simple on purpose
I love
because
that.
I want people to be able to make decisions with the information I share. And as an engineer, it pissed me off when I got to business school and this finance language was overly complicated for no reason. When I got good at business acquisition, I got pissed off because business acquisition ain't that complicated from a nomenclature perspective, but people love to make stuff complicated to keep other people out. In 2025, when you want to participate in $1 million small business acquisition, no matter where you are today, you can start. This podcast is a great place. Resources that I'm probably going to drop here in a second are a great other place. But you don't need to know anymore. You don't need to have any more money. You probably don't need a better credit score. You need the desire, the time, the patience, the willingness to look at a couple of things that won't work out and keep going. And that's really all you have to bring to the table to be successful.
Yeah, I love that. I love that. You mentioned the resources, and we'll get to that in just one second. I feel like this is probably a great place to transition into the life crafting segment, right? So again,
Sure.
just really quick for the listeners, this is something I do every week. Every week, where I establish my goals for the week, and I lay out the steps to be able to achieve and accomplish whatever it is that I'm trying to accomplish. And what I realized was a lot of times I'm guessing at what I need to do to be able to do that thing, right? So I figured I'm talking to all of these amazing entrepreneurs who are very successful in whatever it is that they do. So why don't I just ask them what it is that they're doing? So the question that I like to ask all of our guests is, what is your highest ROI activity? So with that in mind, what is your highest ROI activity?
Easy. Talking to first time customers who have not followed me on social and are getting to know me for the first time. Their questions and state of mind inform everything I do in my business everywhere else. And it's a
Yeah.
lot of fun because of course, I run a commercial business. Don't get me wrong. But if you can't tell, I love what I do and I like helping people by now. I don't know what podcast.
No, that's that. And from a tactile standpoint, where are you meeting a lot of these people? How are you getting in front of them? Talk about some of that side of things.
Sure. So I'm active on socials. So Twitter, LinkedIn. I've invested a lot in YouTube recently. And then my website, you can schedule time with. So I don't hide from my customer. That's very easy. My email is on the bottom of my website. So is my phone number. So when people get interested enough in their success in business acquisition to take the step to reach out to me, I don't make it hard. And
Mhm.
so then when people take that step, like somebody did today, call me up, we talked 45 minutes. I don't do that all the time, but if someone went through some of the hurdles and went, I'm like, hey, let's talk because those people inform everything that I do. And even from the Harvard Business School, one of the biggest lessons in business from there, and there's a lot of other places you probably get the sales guys are the best at. The moment you step away from your customer, you're on the downward trend in your business because your customer knows everything.
Yep. Yeah, no, that makes perfect sense. You're helping do your own market research too by being in touch with them and keeping that form of communication open. Do you have any frameworks or anything like that, or any thought processes? And I did look at some of your YouTube content. I'm just curious how you come up with, this is the topic that I'm going to talk about. Is there any thought process? Are you looking at what worked for other people and then you're recrafting your own messages? What does that look like for you?
I'm going to give you more than you asked for, but when people make comments on my socials that show a lack of understanding of something and they're emphatic about, and they pile up in number, I realize that I need to make a video to fill that knowledge gap for them and other people because they're smart people. So if they're emphatically saying something that's wrong, Elliot, give them the knowledge gap that they need to reconsider that if they're so wise to listen to new data and inform new decisions. Because not everybody does. Some people just have one decision. The other one is I ask my audience, like today on Twitter, I said, hey guys, here's 4 topics. Which one should I do next? And My people, my audience, they tell me I sometimes do that in email. I try to make it interactive. I don't look so much at what other people do. In fact, I fought a 3-month battle around YouTube content delivery. I won't give you all of that, but what I realize is what's good for the algorithm ain't good for my main persona. And that doing what other people do is going to attract who other people sell to. And I don't cater to them. So, not to knock anyone, because we all help somebody in the process, right? But I spoke about a more mature potential customer, right? I'm talking to somebody who's invested, somebody who's put some money aside, is dedicated to learning. There's some newbies that other people respond to. So when they get a video that gets 500,000 views, that's talking to a beginner that won't fit into my program. If I copy that, I'm silly for that.
Hmm.
I need to create the next great video for someone like Matt, or one of Matt's listeners. It's like, hey, I think this is the young one to migrate all my stuff from real estate to doing my first business acquisition deal. And I'm going to use this podcast and maybe 2 or 3 LA's videos to walk me from where I am to where I need to be. That's where my mind is, strategy is around my topics. It's walking people from where they are to where success is in no nonsense, simple terms. So they can,
Yeah, I love that. And it all comes back down to put a name to it, knowing your avatar and being steadfast with this is who I'm talking to, and that's not going to resonate with the people that I'm trying to attract. And I feel like as entrepreneurs, that's a really important lesson to learn and keep in the top of your mind, right? Because you're always going to see things that are attractive, and I can do that. I can do that better than them. But like you said, you're going to be attracting the wrong type of people. So
the video that
keep it.
I could do that would get the most views would be how to buy a business with no money.
Hmm.
It would send all of my avatars away. That's how
Yeah.
razor sharp this stuff can be. They'd be like, "Oh, he drank the Kool-Aid. He's
Yeah.
he's willing to take my money and sell me BS. I'm out of here." And
Yep.
so the reason I fight so hard, even though I have a lot of advisors on the marketing side, is because, hey, Avatar, I know a little bit about you. I'm fighting for your stuff being on my channel so you can get what you, and I'm okay with not having the views of some other people, because when people talk about my content, when it hits, Matt, oh man, they got a lot to say. So
Yeah.
I keep my ear to the ground enough to get feedback from my avatar around, gosh, this stuff was so complex other places. It's so freaking.
Yeah. Yeah. I love it. I love it. Elliot, this has all been fantastic information. I learned a hell of a lot. Uh, Thank you for opening up on some of these topics. This has really been great. If people want to learn more about you or your services, what would be the best way to reach out and get in touch, or even
Sure.
learn more about you?
The best place, and I'm going to send you to one spot because it's really the best place, my YouTube channel. It's Guardian Due Diligence on YouTube, or youtube.com/@ Guardian Due Diligence. That is the most comprehensive, curated, enjoyable place to interact with me. I'm on LinkedIn, I'm on Twitter, but if it was me and I was in your seat matter and you're listening to seat, go to YouTube. That's where I spend most of my time. That's where I best stuff.
Excellent, excellent. Yeah, Elliot, again, many thanks for all the advice here, and I hope that was fun for you as well.
I told you I love talking to my customers. So I feel like I'm talking to a couple now. So yeah, I loved it. Thank you for having me.
Excellent. And that's it for today's episode of Invest in Square Feet. I hope this gave you a new perspective on how Main Street businesses, the laundromats, the plumbing companies, and trucking companies out there can be incredible wealth building opportunities. If this got your wheels turning and you want to dive deeper, check out Elliott's Guardian Due Diligence YouTube channel. He's got a ton of great content to help you figure out if investing in small businesses is right for you. And hey, if you like this episode, don't forget to subscribe, leave a review, or send it to someone who's been thinking about buying a business. We love hearing your feedback and ideas, so hit us up on social media too. Thanks for hanging out today with us. Until next time, keep exploring new ways to build your wealth, one square foot at a time, or one smart business at a time.